this works. Start streaming. YouTube. YouTube video check. Looks good. YouTube audio hopefully looks good. Discord audio looks good. All right, check, check. It is Friday, March 15th, 2024, and this is a coding stream, maybe, but there's very few people here, so um, what I think I'm going to actually do, there's 0 questions queued up. So since there's 0 questions queued up, I am going to actually take this opportunity to talk about something a little bit different, and then we can get into the coding. But this is something that's been on my mind. I took a vacation recently and just was sitting at the top of a mountain staring at the stars and thinking about all this stuff and wrote some notes down. But this is kind of a follow-up to a lot of the requests that I get on a daily basis. Good morning, Joe. Um, a lot of the requests I get on a daily basis coming in for like custom development type stuff. Um, and I'm going to just call this, let's make this big. We're going to call this Eager Puppy Pitfalls. I'm not trying to single anybody out. This isn't targeted at a specific person at all. I get quite a few handfuls of emails and contacts every single day, and a lot of it's repeating over and over and over the similar types of requests. So I want to address some of these things before we get into the coding stuff, because I'm assuming if you're joining this stream, you're watching this stream, you are either A, in the development community, you want to either start coding, or you are coding, or you've been coding for a long time and you want to start doing like trading related coding, and slash or B, you are trying to trade and make money, but you are still losing money, or you are not yet consistently profitable. So with those assumptions in mind, that's kind of where I'm going forward here. And by you've been trading, I mean you're either starting out, you've been trading for a few months, even a few years, you're still consistently losing money, you're not consistently making money or flatlining yet, and you're wondering what the heck is going on. So I've just compiled all these notes from people who have contacted me over the past 1.5 years, and some of the conversations that I have on a daily basis here. So let's jump into these eager puppy pitfalls, and this can be an open discussion. You guys can jump in off the mic and come in. Hopefully this will be useful for somebody. Also, I should say with a preface here, I'm no guru. I'm a developing trader as well. I'm always learning both coding, programming, and trading, so I don't have the answers for you. This is just my observations, okay? I'm not telling you what to do. This is just my observations. So, take it with that grain of salt. So the very first thing that I will say is that technical patterns and technical indicators are not going to lead you to edge or profitability on their own. I'm going to get so much hate mail and comments for this live stream we're about to do. A simple technical pattern is not going to have you retiring on the beach, sipping whatever drink of your choice and just raking money in. You guys contact me all the time saying I have this technical pattern. It usually involves the words either zigzag or higher highs, higher lows. Let me zoom in here. This is really small. Here we go. Higher highs, higher lows, or some other you guys are using MACD, you guys are using whatever series of indicators. Just realistically, this stuff is not going to lead you to edge and profitability, okay? Next thing, paying somebody for a course is probably not going to lead you to profitability. And if you don't believe me, then go ahead and do it, and then come back and provide some proof that that you became profitable after paying someone for a course. There is no shortcuts here. You have to go through the pain as far as I'm aware. I don't know of any shortcuts. Let me put it that way. Paying someone for a course is not going to be a shortcut that's going to get you anywhere forward. Everything you can probably get from a course is probably available online for free anyways, or in the library, in terms of books. So after you've developed a certain amount of domain knowledge and you actually know the basics of how the market like is structured and how it functions, then it's about, getting cut and taking pain and dealing with it and figuring yourself out. There is no fast track here, and paying someone for a course is not going to do it for you. One sec, I gotta clear my throat. Next, here we're going to get into the juicy stuff. Um, Most of you are willing to lie to yourselves, specifically convincing yourselves of like alternate truths or like ignoring your weaknesses of character, your own blind spots, and your own fears. This is going to come up later, but I talk to people every day who, just in the course of a verbal conversation with them, I can spot multiple times where they're lying to themselves about either what they're afraid of. They're trading with scared money, maybe they borrowed money to trade, which is a terrible idea. Um, Maybe they know they have a risk problem, like they don't. Let's just take a really basic example: someone who doesn't honor their stops or doesn't put a stop in just to take the low hanging fruit, and they just lie to themselves about it. Like, yeah, I really need to take care of that. The fact that I move my stops, yeah. I'm afraid because last time I did it and it went back and I would have made money had I just not taken my stop. That kind of BS. Um, Many of you are lying to yourselves. You need to acknowledge your weaknesses of character, your blind spots, your fears. Why? Because once you acknowledge and harness them, they can actually become strengths for you in terms of skipping or selectively and with awareness, skipping trading opportunities, I guess opportunities slash subpar trades for you that if you had identified these things, you would have been like, hey, this is a spot where I think I want to go, but I know over time this is the wrong decision to make in my trading, so I'm not going to. And so a lot of people at the beginning are not willing to really do the hard conversations. Okay, next. Complexity is not edge. Again, I get on a daily basis people requesting quotes for trading systems that they want an estimate for of something that is so complex and puts 100 different zigzag indicators, other indicators together, and then as soon as I start picking into and asking why, like why did you add the zigzag indicator? Why did you add this other indicator? Always the answer is, well, I don't know, or I don't really know how it works, or I don't really know what it's actually lending to my edge. If you're adding stuff just for the sake of adding stuff to your trading setup and you don't understand how it works or what edge it's giving you, you're just adding complexity. Complexity does not provide edge. If you disagree with this, go ahead and throw a bunch of indicators on your chart, live trade for a year or two, send me the results. Show me that you were profitable by adding just complexity with disregard to what it's actually doing on the fundamental level. Um, Next, there is no holy grail. Okay. Um, every day I get the following question: what bar period should I use? There is no holy grail. There is no bar period that I can tell you that you should use in order to make money. This is the wrong question to be asking. Um, the bar period that you use should completely depend on who you are, what you're looking for, what you're trying to get out of the market, what your risk profile is, what approach you're taking, what thesis you have for how you're going to put risk on. I'm assuming most of you who are watching this are not hedge funds looking to put on hedges with multi-million or billion-dollar positions. You wouldn't be here if that was you. Most of you are retail who are looking to make directional trades. You're looking to get in and then have the whatever the market is that you're trading move away from the price that you entered in your desired direction until you hit a target price. That's most of you. So all of this kind of stuff really needs to be dependent on what approach you're trying to take. Um, there is no magical bar period, okay? No magical EMA period or moving average period. Um, there is no cocktail of indicators or bar periods or whatever that's going to get you to profitability. It's not like you're like, oh, 5 minute period. Of course. Had I only done, oh, sorry, cat. My bad. I put my hands down on the desk and the cat just jumped behind me. Um, what was I saying? It's not like you're going to change your bar period from 1 minute to 5 minutes and all of a sudden money is going to start ringing in. That is not edge. That is not going to lead you to edge. Here's another one, again, on an almost daily basis. The market is always changing. Successful long-term traders who are going to still be here in 5, 10, 15, 20 years, they adapt to conditions. I'm skipping words here. Adapt to conditions. Why is this an important point? Because I get so many requests so frequently about building something that is so static to whatever the current market conditions are in terms of building out an automated system. And you think, well, this is working right now. This should work tomorrow and next week and next month and the year after that. No, the market's always changing. This market we have today is not yesterday's. It's not a month ago's. It's not a year ago's. It's today's. And if you do not have an approach, again, assuming you're not a hedge fund, you're a retail small account trying to figure something out, trying to make it, if you do not learn how to ride the waves of change and you are fixed to just doing one point of view of the market, it's going to be difficult for you to be able to adapt to the different market regimes as the market shifts. You know, we're at all-time highs right now. A couple of months ago, we weren't. Those are two very different market regimes. The behavior and price action that we're seeing across a variety of instruments here is very different than the behavior and price action we saw across the same variety of instruments a few months ago. You have to be able to sit in the seat for enough time to see these conditions play out time after time after time again, lose in those conditions in a risk appropriate amount, learn from those losses, and then apply those to future markets, not because those future markets will be the same. They won't. Like I said, markets are always changing. The ones who will be successful will be like, hey, I saw something similar to this 5 years ago. I saw something similar to this 5 years ago, 10 years ago, and I remember how dangerous it was, and that's why I'm going to protect myself with A, B, and C action steps. That is what that looks like. Assuming that the market, okay, so here's a great example. A couple of years ago, when the meme stock stuff was going real hard, it was buy the dip, right? Everyone was BTFD, buy the dip. And the market just kept going up and people kept BTFDing. And where are those people now? Awfully quiet now, aren't they? Why? Because they blew their account. Because they didn't adapt to the changing market conditions. Where am I? Okay, here we go. Next one. Some of you guys who are reaching out, maybe listening, are so set and convinced that the market owes you something, or that there's some kind of something. Oh, you feel entitled to something. You feel owed something from the market. It comes through in language and mindset like, I've been just doing this for so long and I've been losing so long. It's gotta work now, or it's gotta work soon. It's just it hasn't been working for so long. It's gotta work soon. No, the market owes you nothing. You are entitled to nothing. Um, this kind of falls into the same piece as lying, willing to lie to yourself. Thinking that because you have suffered losses or you had a hard time, that now it's your time to get something back and that you ought to be entitled to something to get back. No, you're not. You're not. You and every other single retail trader out there who is not understanding this piece are thinking the same exact thing. You're not entitled to anything. Um, okay, this one. Chat GPT is not going to write you a consistently profitable trading strategy, nor will it be your holy grail. I've mentioned in past streams what my feelings on using ChatGPT are. Some people use it to augment their research process, learning new things about coding, learning new things about whatever topic. But that's a perfectly acceptable, in my opinion, way to use ChatGPT. And honestly, use it whatever way you want to. I'm not here to, tell you how to live your life. Use it however you want to use it. But you guys are using ChatGPT to try to build out some complex trading strategy, thinking it's going to make you profitable. And then what happens every single time you run it? It doesn't work. Either it syntactically doesn't work or ideologically it doesn't work. It doesn't actually do the thing that you want it to do. Yet you guys still keep coming back to have ChatGPT try to be this holy grail that you can, if you just pay $10 a month for ChatGPT, it's going to make you a consistently profitable trading strategy and write it for you. Go ahead and show me the proof of this. I would love to see it. Please share that with me. A year or two later, I won't even use it myself. I just this is such a frequent thing. Well, I was building something. I had ChatGPT write this trading strategy for me, but it's not working. Well, yeah, of course. Otherwise, everybody would be using it, and that edge would be gone. Again, this is another form of lying to yourself, thinking that if you just ask ChatGPT to build you a profitable trading strategy, poof, magic, it'll happen. That is you lying, willing to lie to yourself. Okay. Um, okay, next one. You think someone on YouTube, TikTok, or whatever platform is going to teach you how to make millions using one simple trick. I mean, I don't even know what to say to this. If you think that watching a 5-minute video is going to be your trader education and that's sufficient, and then you subscribe to those people and push that and say, hey, this is the path forward. Again, I wish you luck and ask that in a year or two you show some proof of how that one TikTok video that was a few minutes or seconds long helped you reach financial freedom and consistently. That's another form of you lying to yourself. Um, okay, here's another one. This is less frequently asked, but I do get people from time to time who think they can quit their day job and begin trading full time successfully. Successfully with no experience or little experience. I don't even know where this type of idea could come from, but this happens as well. Another one is these kinds of people are also talking about how much money they're going to make. If I only took this trade, I'd make so much money. If I only had this setup working, I'd only make this much money. I'd only make this much money. That is the wrong way to think. That is a short-term way to think, and I have a very high probability that you will have blown your account within a few years, if not shorter time. And the reason is because those people who are yapping about all their money that they're making are not actually talking about the most important thing, which is focusing on your risk, specifically limiting your risk and how to limit your losses. This, guys, this is the one. This is what you need. Don't focus on making the money. Focus on stop losing the money, especially for those of you who are still searching for a way to get break even and you've been trading for, a couple of years or less, and you're still losing money consistently. Don't stop worrying about making money. Start figuring out why you're losing money and stop it. Stop the bleeding from happening. This is what you need to be focusing on, not YouTube videos, not someone's courses, not Chat GPT, not complexity and adding indicators to your chart. Figure out why you're losing money and make it stop. Because if you don't, you're going to blow your account. And then I'll end it with this last one. And I'm just going to type it out the way I have it in my notes here. Some of you suffer from a significant misunderstanding of risk and the consequences of mismanaging that risk. This is what causes blown accounts right here. You mismanage your risk, you misunderstand how much risk you're actually taking, and then you end up blowing your account. The problem with blowing your account, obviously, is that you have taken yourself out of the game and you can no longer place a trade anymore. I have my own weaknesses in my own discretionary trading. This risk management is not one of them, thankfully. And if you want to be able to trade in 10 years and 20 years, you need to figure this piece out. You need to figure out how to manage your risk so that you are not putting your account in jeopardy. If you have blown an account before, then you know painfully well what this is. It means that you took on risk that was too large and you lost everything. That is not fun. It's not easy to recover from. Not all of us have, uh, you know, a trust fund or something sitting back there where you can refuel your trading account. That's just not realistic. Most of us who are on the retail side who are probably listening to this have one account. We scrape the money together to make the account, and we're trying to make something out of it. If you do not respect your risk, you might as well donate that money to your favorite charity or some good cause. You're going to be giving it to the market otherwise, and probably in a very unhappy way. Anyways, so those are my thoughts from atop the mountain. Um, After just getting emails and messages every day about so many of these different things. So, hopefully that was helpful to you guys. Now we can actually start the coding part. But yeah, that's the eager puppy pitfalls that I identified that are just so repeating. Throwing technical indicators on a chart, thinking that's going to solve it for you. Complexity somehow being equated to edge, which it's not. Trying to find some kind of holy grail bar period or whatever, or indicator. Um, expecting or feeling entitled that someone or something like ChatGPT is going to solve all your trading questions and problems. No, it's not. The path forward is a bruising one. And if you want to be here in 20 years or 10 years or however many years, you need to focus on your risk, limiting it, limiting your losses, and understanding how much risk you're actually putting on, and then finding a way to stop the losses so that your winners, which will come if you have edge, can actually shine through. All right, that's it. That was the eager puppy pitfalls. So we got good morning. Okay, we got a question here. Coding wise, it looks like, let me take a screenshot of it. Hopefully that was helpful. I don't know if you guys find that helpful, let me know in the Discord. Okay. Uh, Guillaume. I'm probably butchering that. I apologize. Can you tell me how to pronounce this? Guillaume. Guillaume.
Hello.
Hello.
Yes, it's
Hey,
Guillaume. Yeah.
Guillaume. Guillaume. Sorry about that. Hey,
Yeah.
thank you for the
Thanks for
question. So,
the.
so what
for the-
logic did you use for the iceberg detector within the tape on chart study? Well, let's go ahead and open up the let's go ahead and open it up. One sec. Let me where's Vim?
I
Let me
tried to read the code in GitHub,
yeah.
but it was like I was only interested in the iceberg, and it was mostly not about that. So I was kind of confused of what the logic was.
Yeah, one second. Let me open up that what did I call it? Talk? Tape on chart? No, I called it tape on chart.cpp. Here it is. I guess I'll just put it over here. Tape on chart.cpp. Iceberg. Okay, so the basic premise here is that let me look through this again because it's been a couple of months since I've looked at this. Okay, so the premise of the iceberg. Actually, you know what I'm going to do is I'm going to put it over there. Okay, so when we say iceberg, I want to put that in quotes because iceberg is a really misleading term that is thrown around by a lot of people, especially online, to for various reasons. We won't get into the why they're misleading here, but basically this term is heavily abused. Um, in general, I guess what I would say is that iceberg is when you have a participant who is either sitting on the book on the bid or the ask, but not advertising their full size. So they're only advertised if this is the water level, right? They're only advertising this much size, but then the bulk of their size is hidden, either in a hidden order or they're using some kind of algorithm to execute the iceberg, or they are manually doing it and just not exposing the full size. This is, by the way, an iceberg drawing. Uh, I finished at the top of my art class here. But that's the point. So the question is, well, how do you detect it then? Well, there's really only one straightforward way that I can try to detect something of this nature, which is, are there prices where um, we see a small amount being advertised on the book, but then what actually executes is a significantly larger amount. That's the premise of what I built with that. And it's really straightforward and simple. You guys can grab it from GitHub and we can walk through it here right now just as a helpful walkthrough. And actually, I made a video on this. Actually, I don't think I actually walked through the nitty-gritty details of the iceberg thing, so we can do that here. But that's basically what I'm doing from a drawing perspective. I'm watching the tape, right? I'm watching each transaction that executed go by, and I'm looking for repeat prints at a particular price level. And then I'm also observing what the advertised book looks like at that price level. And if the number of repeating prints and the volume of repeating prints at that particular price level greatly exceed what is being advertised, then we know there's more sitting back there, and it's an interpreted, implicit iceberg, if you will, right? You can call it a hidden order, you can call it whatever you want, but that's basically the idea. Um, Is this foolproof? No. Is this as good as platform X, Y, and Z or Bookmap's iceberg detector? I have no idea. Is anybody else's iceberg detector better or fully quote unquote accurate? No, not necessarily. No one has the data to be able to explicitly identify these orders. This is also, it's funny you asked this because this is another one of those there is no holy grail here, okay? Even if you could detect icebergs like explicitly, like every single one of them, that is not necessarily going to give you any sort of edge. It's how you're going to use that, how you're going to manage that, how are you going to manage the risk. This is not a holy grail, I will add, okay? Um, and my tape on chart thing is not going to all of a sudden turn you from unprofitable to profitable just because it can see these repeating orders that amass more than what the advertised size was at that price that got executed there. But anyways, let's go ahead and jump into the jump into it. So here, let's get through all the structures to the actual execution code, which is down here further.
Just to, if I can add something on what
Yes,
you just said,
yes,
about like the detection, and no one can actually like be for like detect for sure an iceberg or every iceberg.
yes.
Like actually, I looked into it, and like there could be a way, but I don't know if it's possible via ACSIL or Sierra. Actually, it's because like if an iceberg is managed by the CME, like the every time the the participant will reload the DOM and get more contracts executed, it will be the same transaction ID as the previous ones. So
Right.
then,
But
if you
hold on.
know,
Pause right here.
just
Pause right here. Pause right here.
yeah,
If you were an institution trying to, you said futures, so let's say you were an institution that needed to sell 5,000 contracts, would you be stupid enough to sell those 5,000 contracts on one transaction ID?
uh,
The answer
well,
is
that's
the
actually
answer is obviously no, you wouldn't, because you would have a team in place with. So let me restate the question for folks who are watching, and I'll draw it out here. So the question is would the transaction ID be the same for the above water portion of the iceberg as well as the below water, so the hidden, hidden portion? And the answer is, why on earth would a serious player or institution that's actually moving size with a large enough iceberg be stupid enough to use the same order? They wouldn't. They absolutely wouldn't. And having worked on desks and funds, I know that we didn't. We would break these up. So there's no way you'd be able to follow us because that is crucial that nobody be able to see what we're actually trying to do. So, assuming that someone is dumb enough to just put it all on one order, I mean, that's really sloppy. It's very, very sloppy of them. So I just wanted to touch base on that piece because okay, so yes, maybe there is a way if someone did it all on one transaction, sure, maybe there is some way to do it, but I do not think that that's a majority a case of the time.
okay. Oh yeah, well, you answered the question then.
Okay.
So perfect.
So
Thank
going back to what were we looking for? We were looking for the iceberg functionality. Okay, so here I'm getting the time and sales here on line 608, right? Getting the time and sales, and then what we're doing down, this is clearing stuff. So here's our big loop, right? Where we're just ripping through the live time and sales that came across, and we're grabbing different parameters from the record of the most recent transaction, and the detect a repeating print. This is it right here. Okay, it's right here, 747. Okay. Um, and it might actually be more reliable than a Boeing 747 based on all the news I've seen um, lately. So what it's actually doing is it's looking for repeating prints at the same price as a first step of detection. So the process of detection is actually a sequential process of multiple steps, right? The first step is, hey, did did we just execute a print at a price that we had previously executed at. And if we did, and it's on the same side, excuse me, and the advertised size on the book, so we're looking not anymore at the time in sales, but at, oh geez, but at the, let me put it on the right side here. We're not looking at the time in sales anymore, but we're looking at the ladder, if you will, for futures. So this is the bid, this is the ask, and we're looking at whatever the size is being displayed on the book. And if that largest size is eclipsed by the volume of price that keeps repeating on a particular price and side, so let's say this is only showing one contract, but then let's say on our tape, well, this will be our tape, right? Our time and sales right here, time and sales. But let's say at that same price, we saw 100, 100, 100, 100, just to make it an easy example. Well, they're only showing one contract advertised, but we got 400 or 500 contracts that just exercised on that same price. That's when this kicks in. It's saying, hey, we're way over what the advertised um, size was, which was only one contract. We've already done 1, 2, 3, 400 contracts at the same price. Only one contract was advertised. Let's go ahead and store this price and the volume that was done in this little structure that I created. It's a very, primitive C struct. I just called it repeat record. It's defined up here. Online, hold on, set case ignore color scheme torte. There we go. This is the structure that I just built out to hold the price, the number of consecutive prints, and the total volume that was executed, just to be able to find this. Where am I? And my machine just froze. You guys still got me? Am I still going? I think I am. Okay. So this just creates that repeat record struct, an instance of it, and then loads the various parameters, like sets them, I should say, and then stores it in a vector, essentially an array, right here. And that is used later to draw onto the chart here with the circles, which there aren't any here in AMD right now, but that's how that's done. So, does that answer your question?
Yes, sir.
Awesome.
Perfect.
All right, so let's go on. We got a question from Nolan. Let me take a screenshot here. Hello, Nolan. Okay, when working with string.format, is there a way to dynamically insert the float value format into the input? So for example, price is 0.2f price. The 0.2 is what I would like to be dynamic, i.e. 0.1, 0.2, 0.4, depending on whatever symbol the study is applied to. Yes, so this is a very interesting question that I was asking some C++ gurus who have way more experience than I do about this a couple of weeks ago for a very similar thing where I wanted to customize this with a variable rather than a hard-coded thing here for like expansion. Actually, I think it was related to the tape on chart thing. Hold on, let's pull up that code again because I think uh, let's look at, I don't remember exactly where it was. Where was it? Hold on, let me make this a little bit bigger so I can see quickly. I'm trying to find the spot in the code where I had that. I believe it was in here. Aha, here we go. Display price, control width, and precision. So I think this is really what the question was. And Nolan, you can actually, I have this latest version up on the GitHub of the tape on chart, so you can go follow along right away. You can go fetch this code. But you see this asterisk right here? That's in place of where your 2 was in your example. So that is the precision that you can specify, and you specify it right before the argument of your value, your float value that you want to print. So if I want it, let's say num digits decimal is set to the value of 3, this would be 0.3f in effect. And then you put the price that you want to format that way as the last argument, after it. So remove your 2, put an asterisk after the period, add the variable that you want to dynamically control that precision with, and then your variable that you're actually formatting. Okay? That's a good question. Very, very good. Also, I should tell you, the width of it is not controllable like this within, at least within ACSIL. So the precision you can control. So the part after the decimal point you can control with this. The width of the actual integer portion you cannot control. So what I'm doing with it is I'm actually using the math library's floor function to grab the integer portion, and then I'm kind of munging the string together by hand. But you can go check out the GitHub and get the get the code so you can kind of walk through what it is I was doing there. But that's a great question. Um, let's see. Lesbian haircut says it was. Thank you. I think that's related to the stuff we were talking about before. Senti. Um, Let me copy this question out because it's kind of long. Let's see here. Senti has a question. As a learning September, I have been trying to build the interactive brokers IB API C++ library in CMake. Currently, it's built by Makefiles. I'm trying to build it using CMake. I've been facing a problem at about 50% of the build. It breaks and says there are duplicate main functions, but I am sure there are none. It seems like CMake is using the built file as a duplicate, and here's some screenshots. Um, I don't know if I can help you with this one. Um, so the compiler is telling you that you have duplicate main functions. You would have to look through. Okay, I wonder if you're actually linking it twice. That's one possibility, or if you're using multiple includes when you only need to use one include. Is that possible? Are you using multiple includes of the same file? Um, and it has a main function. So I think that might be able to do that. And beyond that is where my CMake troubleshooting kind of comes to an end. So this is where I want to get some of those C++ gurus have been doing this for 20, 30 years to come in and help out with questions like this. But I would check your includes and any file that you are including in your code, I would double check to make sure it doesn't have a main function in that include file, because if you're including it twice, that might run you into this issue that you're seeing. Sorry, I can't be of more help there. Dark noise here. Let me grab this comment. And also, I want to say, I forgot to mention this at the top of the call, but I wanted to say thank you to Alan and Dark Noise. Alan manages this server, this community CR Charts community server. He does a great job. Dark Noise helps admin it as well. And because of both of them, we're able to do stuff like this, what we have here today. So thank you to both of you guys. So Dark Noise saying, besides the coding stuff, icebergs are a very specific type of order sent to exchanges by someone who is allowed to do that. So this must be some kind of future specific thing. The condition to send an iceberg order depends on the exchange and the instrument you're trading. So for example, ES and Euro futures, they're both on CME and they have different conditions like the minimum order allowed for those types of order types. So that's a proper iceberg. Um, they're used today, rarely, when someone has an urgent order to fill at a specific price for reasons that don't matter to us. What most people call icebergs is just an algo doing something, but more efficiently. Yep, that makes a lot of sense. That's a great summary of it. Here we got some screenshots from Senti. Actually, let's take a look at these. Let me copy this. Maybe we can figure something out. I don't know. This is kind of out of my ballpark here, but let's take a look. So you're doing call and make on this. Where's your main file? What is your main application file called? Test CPP client. This guy right here. Is this your main one? So yeah, double check everything that you don't have any. Oh no, you have another one here. Hold on. You have test CPP client and main. Um, do these both have a main function in them? Because that might be where your issue's coming from. Um, just looking through your other screenshots here. So double check that. Nolan, thank you. Senti, I've given the stream, so I couldn't join the voice. No issues. Okay. CPP is the only main. Okay, can you check inside of this test CPP client and do a sanity check to make sure nothing else is getting test CPP client static is being linked. Okay, we got a question from Sovereign. Hello, Sovereign. Let's make this a little bigger. Yeah, I'm sorry, Senti. That's out of my ballpark. But hopefully some of the C++ gurus who are in this server, there's a number of them, might be able to help you and take a look at that. Hopefully people who are doing a lot more like command line compiling and have more experience in debugging that kind of stuff. So Sovereign asks, when doing manual looping in a study, is there a good way to calculate some sort of average across all the bars in the study and compare it to its current bar value? A big issue I've had is you can't use something like average plus equals average plus the new value because the script is run just keeps adding infinity on updates. Do you have a mic, Sovereign? Is Sovereign in here? Sovereign is not in here. Maybe they're on YouTube. Okay. You're at work. Focusing hard at work. Cheers to you. Um, okay, so basically, let me try to understand what the underlying question is here. You're trying to calculate an average across all the bars, comparing it to the current value, but you can't use average equals that because it keeps adding the latest one on Infinity on updates. So a code sample, um, a code sample would be super helpful for something like this, so you could debug what you are doing versus. So you're expecting to be able to calculate an average, but it sounds like it keeps incrementing. So probably this piece right here where you're doing average plus equals average plus new value, um, you are probably not gating this. And I mean gating, like you're not wrapping this piece, um, uh, not in conditionals to prevent it from running when you don't want it to, is what I think might be happening here. So if we have a timeline from the Big Bang to the end of humanity, and we have these averages being added and added. So this, let's say our bar index here on the left side of the chart is 0, and then our bar index on the right side of the chart is our live bar, and this is going to be equal to sc dot array size minus 1 index, and you are trying to add up everything and compare it to you're actually not trying to add up everything. You're trying to add up the average to everything up to this bar and then compare it against this bar. So the exercise is actually, let me choose a background color like that. You're trying to grab the average of all of this, right? Let's make it a little bit less like that. You're trying to grab all the average of this, and then you're trying to compare it with the very last one's value. So how would you do that? Well, there's a couple of ways. One idea is that when on reload of the chart, your sc.index is going to be set to 0. It's going to get set to 0 when you hit reload on the chart. So it's going to come back to the beginning of the chart and it's going to try to rip through when you're on manual looping. So when you know that your SC index is 0, you know you're going to be iterating from the beginning, from the left side of the chart all the way across bar by bar up to the right side of the chart. So what you could do there is when you are on SC index 0, you could set up a loop for just when your SC index equals 0, and you could go ahead and loop through the entire chart up to, but stopping before the most recent bar. You could take the value of that sum, divide it by the number of bars you have. Let's just pretend, let's just say there's 10 bars here, just for the sake of argument. And let's say the total value that you were collecting, total value is 100, right? I'm just making this easy for demonstration purposes. So you have summed up 100 whatever units over 10 bars, and so your average is equal to your total divided by the num bars, right? You get an average of 10. So this comes out to 10. This value here, oops, this value here, you need to store it. Store in persistent memory. So you want to keep that in persistent memory so that when your chart, after it's done reloading, it's going to actually be sitting on the live bar right here. So it is not going to be recalculating all of this over and over. So it's just going to be sitting on this one bar here, evaluating the incoming ticks during live market conditions. So by storing this average in persistent memory during live bar conditions, so in other words, when SC index is not 0, but when sc.index is actually equal to sc.array size minus 1, right? This is equal to this because you're on the last live bar. You are live equals true. When you're in this condition, and this comes back to you're not probably not gating this this logic in the way that you are desiring. When you have this situation, that's when you can go ahead and grab that value of the most recent bar and then grab this persistent value that you stored in memory and then do the comparison. That way you're not going to be incrementing your average indefinitely, and that way you are only doing this comparison on the most recent live bar. I'm a CNC programmer, got machine time down. That's really cool. Um, is it, can I ask what industry the CNC stuff you're making is for? What kind of stuff are you making? That's always cool. I took CNC programming when I was a kid. We did like PLCs, and so this is back in like the late 80s, early 90s. Um, and that was a lot of fun, but I'm sure it's changed quite a bit since then. But yeah, that was when I started getting into that stuff. So I've gotten around it in previous study is store a bar index in a struct, something like if the vector back bar index is not equal to index, then execute. Okay, so that, let me take a screenshot of that so that we can put it up here. That might not actually address the underlying issue of what you're trying to do, because you don't need to recalculate when you're sitting in this situation and you're on live bar sovereign, you don't have a need to recalculate everything that happened before that, right? When each incoming tick is happening on this most recent bar and you're live, who cares about recalculating this piece over and over and over again? So you really only need to do this calculation once. That's when you load the chart or you hit refresh on the chart. So you calculate that, you store it, and then on the live bars, when you have this gate and conditional evaluating to true, then you can go ahead and fetch that persistent value that you stored and do the comparison. Does that make sense, what I'm saying? And while we wait for him to respond, any other questions, guys? Throw any last questions in here. We're coming up on an hour here. And it can be coding related, or if you guys have questions about the stuff we talked at the beginning, the stuff, by golly, so important. Okay, great. Sovereign, great. So throw your follow-up questions in there if you have any. If you guys have any other questions, now's the time. Either jump on the mic, throw them into chat. We'll give it another minute. I wish I could post the code, but there's a lot to it. You can hit me up in a direct message if you want, Sovereign, when you're done with work. That's fine. You can do that. Got some people typing. Again, feel free to jump on the mic if that's better. We'll give it another 2 minutes and then we'll cut the stream. You're welcome.
Yeah, I got a question.
Hey, man.
Hey, how's it going?
Good. You?
Yeah, I'm doing pretty good, thanks. Um, I just wanted to try to keep this kind of a like a not in-depth question, but maybe at a higher level. But I just wanted to see what would be like a best practice um, for example, I want to take a look at, let's say, past pivot points. Um, and you can define those however you want. But what I'm trying to do is compare, um, let's say, a current pivot point, so something that's just occurring to past points in the market. What would be the best way to set up like a list to be able to compare those values to, or I guess from the current values to the past values? Does
Sure.
that make sense?
I think so. Let me try
Mhm.
to restate what I think you're asking, but I think really if we broke this down to the like computer science fundamental part of the question is I have what you're asking is I have data um, that I need to store to use in comparisons later.
Yes.
What's the most effective way to store my data?
Yeah.
That's
Yep.
that's essentially what you're asking if we generalized it. Um, I will use this example of this as one method that you could use. I had the same exact situation. I had a piece of custom data, like in the sense of it's custom. It's that it didn't fit nicely into a primitive type like an integer or a string, right? I needed to store repeating records for these iceberg air quotes. I don't know if you were on the call earlier, like half an hour ago when we went through this, but basically I had data I needed to store and I needed to use it in comparisons later. So what's the most effective way? Well, that data wasn't just one data point, it was multiple data points, right? And these represented some kind of event that I needed to cache and then reference later on in my calculations. So what I went ahead and did is I created a custom struct that matched what I needed to store. So I identified the various pieces. So in, this doesn't have to be pivot points. This could be called whatever. You could call this apple and bananas. You identify the pieces of data that you need. If you have more than one, then it'll probably be easier to create a custom structure, which in C++ is very straightforward to do. You can do it by using the struct keyword and then give your struct type a name. I called mine repeating record. And then I identified the various members of that struct and their data types that I needed to keep track of. So identify what kind of if you're using pivot points, maybe you need to know what var index it happened on. Maybe you need to know what price it happened on. Maybe you need to know X, Y, and Z about it too, right? So identify all those parameters. And then once you have a list of them, maybe you can make a custom struct that's named like pivot point records or something, or whatever you want to call it. And then what you can do is that you can create a, a vector. You could use an array if you'd like. I think vector can be easier to work with depending on what type of operations you're trying to do. But so I think I used a vector for this. And you can see what I did. Repeating records are stored here, potential icebergs. All I did was I created a vector using and passing the data type of my repeat record struct, which I built here, which can house all of my custom points for each event. And now I have an array or a vector, the same thing. I have an array, a vector of these records, and that vector is called repeat records, plural. And now repeat records, I can see how many records are in there. I can fetch records from in there. I can modify records in there. I can add records in there. I can delete records in there. I can do whatever the heck I want with the records in there. So that is probably the easiest way to do what you're saying. And it has nothing to do with pivot points. It's I have data, I have complex data I need to store and use later in comparisons. What's the best way to do that? And that's my suggestion.
Okay, thank you for that.
Yeah. Okay, last call, guys. Any other questions? Coding or trading?
Hey, homie.
Hey,
So this is a pretty simple question.
that is that is a famous last words. Hold on a second. There's another thing I need to add to this. People say zigzag, higher highs, higher lows. The other one is this is simple. I think every day I get at least 5 of these. Like, this is really simple. And then it's like anything but. But anyways, I'm not
This
trying
is
to beat
one.
up on you. But
Yeah, you're good. This is one you've heard 1,000 times, I
okay,
think.
okay,
So I have now been working on learning Python for backtesting
awesome.
purposes for about from a language, 2 months.
Okay,
Um, or hell, 4 months. The problem is, so there's 2 types of educational resources. One is Python, where I'm just talking about YouTube or the internet resources right now, where people will teach Python for all practical purposes, which takes forever to learn.
Yep.
The other resource is people teaching backtesting or trading related Python,
Yep.
which has a understanding that you're already intermediate to advanced with
So
Python as
you have
a
a
whole.
gap. You have a
Yeah.
knowledge gap in your domain knowledge in the programming language that you're not able to achieve the level of backtesting or the level that's being presented to you in the backtesting educational resources.
But then it's also, or at least for me, I have about a year and a half left till I have to go back to work before I can get trading right.
Gotcha.
So I don't
Okay.
have a year or whatever, let's call it 6 months to learn the entire Python language as a whole. Do
Right.
you have any resource recommendations that?
Yes. I'm not sure if you're gonna like it. So well, no, because you said you're 4 months in. So this is complete noob. Or wait, how do you spell noob? Is it noob or noob?
Correct.
Which way is it?
Noob.
It's
Or
Noob.
I think so.
Okay, so this is complete noob, and you're right there.
Correct.
And your courses that you're doing, the backtesting resources are giving you a level there. And so what you effectively have is this big gap right here that you don't have this domain knowledge. It's missing from your brain, and you are trying to follow this. So the advice that I will give you is continue focusing on your goal, on the backtesting resources. Every single time you run into something that you don't know how it works and you don't know how or what it is, that is an opportunity for you to learn and progress from here to here. This is part of the learning process. This is the same as trading or anything else in life as well, guys. Whether it's learning to throw a curveball with a baseball, or whether it's learning to cook something, a delicious new dish, or if it's learning how to be more patient with your children. Um, you have to strive and struggle in order to get to that spot that you wish to be. I would not look backwards to these resources anymore. I would look only to what you're trying to get to, and every time you run into a hurdle, you go and find the answer to that hurdle. You go and Google it and YouTube it and understand whatever it is they're talking about until you understand and overcome that hurdle, and then you move on. And what you will find is that very, very quickly, you'll be right here with them. You will make up this gap very quickly. That is my advice. Keep plowing
Yep.
forward. Keep going forward. Keep struggling. Keep grinding. Keep working. You're on the right path.
10-4. I appreciate it.
Of course. Okay, guys. Thank you for joining. I want to again say thank you to Alan and Dark Noise for allowing me to make this happen here on the Sierra Charts community server. Have a wonderful weekend, and I will catch you on the next one. I hope this was helpful for you. Bye now.
Have a good
And
weekend too.
stream.
Appreciate it.
Yeah, you too.